Order. Roll call by Amy.
Fire. Paschal. Tompkins. Varsho. Wagner. Witzel.
Here.
Fisher. Spiros. O'Reilly.
Here.
Hendler.
Here.
Let's stand for the Pledge of Allegiance, please. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. At this time, I'll recognize those members of the public who have indicated a desire to address the council. Upon recognition by me, persons may address the council first stating their name and address. The council may act on emergency matters introduced by members of the council. Are there any public comments? Are there any public comments? Are there any public comments? Seeing none, we'll move on to item D, approval of minutes, July 26th, 2022.
I would like to pull the finance, budget, and personnel minutes.
But we're not there yet, Natasha. Yep, that'll come under the consent agenda, but thank you. Now we can hear you. Thank you. Okay, approval of minutes by Alderman Fire, second by Alderman Wagner. Any discussion? Seeing none, please vote.
Fire. Paschal.
Yes.
Tompkins.
Yes.
Varsho.
Yes.
Wagner.
Yes.
Witzel.
Yes.
O'Reilly.
Yes.
Hendler.
Yes.
Thank you. Staff updates?
I do have one short one. I have some good news, and I did maybe send it out earlier, but it's worth telling everybody hearing my voice tonight. On July 28th, we had a ratings call with Moody's. Jennifer Selensky, our finance director, participated along with Dave Ferris from Ellers, who will be on this meeting remotely as well. It was ahead of our upcoming $4.3 million borrowing, which you're going to hear about here shortly. Upon reviewing our current financial condition, the Moody's Ratings Committee recognized our ongoing efforts. They did continue to maintain our A1 rating, and I know A1 sounds like top of the line. It's not. We dropped a notch a couple of years back, but they did remove the negative outlook, which is an indication in their mind that in the past couple of years, they thought, if anything, we were leaning in the wrong direction, and they have removed that. So that's a good sign for us, for our financial improvement, good sign to bidders on our bonds, and we'll hear more about that when we look at this current borrowing here in a few minutes. So it's an excellent step for us. It's not the end of the line, a lot more work to be done, but it does show that we're making strides in the right direction. And I just wanted that noted that it feels really good to have that negative outlook removed from our credit rating.
Thank you, Steve. Item F, my comments. Employee recognitions. Robert Behart, Police Department, 10 years. Congratulations, Robert. And Tanya Greger, Finance Department, 5 years. Congratulations, Tanya. Item G, council comments. Any council comments? Seeing none. Item H, reports from commissions, boards, and committees. Seeing none, we'll move on to I, consent agendas. Alderman Paschal.
I would like to pull item number H2 from the consent agenda.
Anybody else?
Is item H2 finance, budget, and personnel?
It's one of them.
Actually, that's H1, Natasha. So H1 is what you want to pull? The finance audit services?
No, I think it's
No, I'd like to pull the policy change for violence and weapons in the workplace. Those minutes.
And Alderman Paschal also requested that. Alderman Witzel?
I believe we have to have a motion first before we can start pulling things, so I'll move to approve.
Thank you. Second by Mr. Wagner. Any comments? Okay. Looking for a motion to receive and place on file the consent agenda approving recommended action. Nick should raise his hand and request something to be removed. They'll refer to it by the letter number of the item on the consent agenda, which Nick has done already, and Natasha also. Once the item is removed, you're asked for a motion and a second to approve, which we have already done. Once the rest is approved, you then can ask whoever put the item out that
We
they
have
would.
we have to vote on the motion right now, Lois.
Okay,
Fire,
Yes.
Paschal,
Yes.
Tompkins,
Yes.
Marshall, Wagner, Witzel,
Yes.
Fisher, O'Reilly,
Yes.
Henler.
Yes.
then we'll call Alderman Paschal.
Thank you, Madam Mayor. If you remember a month ago or so, or last month, we changed the rules here at the police, or at the City Hall to take down the signs concerning no weapons in the building. I was looking forward to the change in policy that was to follow that regarding workplace, zero tolerance for workplace violence. However, when I saw the changes that were made to the policy, I was quite disappointed in that the only thing that the policy did, or the change made, the only change that was made is any mention of weapons. If anything, we need stronger policies concerning weapons in the building now that we're allowing weapons in the building. So I would like to send this back to the Finance, Budget, and Personnel Committee for further consideration. I've already spoken with Steve and with Sarah earlier today, and they agree that we do need some additional work in this area as far as updating the policy. As you know, I was with the police department. I've spent a majority of my life around weapons and people with weapons, so I'm not uncomfortable with that. But even in the police setting, there are numerous cases of careless behavior with weapons, sometimes reckless behavior with weapons. And I would hate to see any of those things occur in this building or in any of the other city buildings because we have not addressed this properly. It was easy when we had a rule that you couldn't have weapons in the building because that was your rule, no weapons in the building. Now you have to address proper behavior for those weapons in the building. And I think we need to do that sooner rather than later. Thank you.
Thank you, Nick. And Natasha, would you like to add a comment?
Yeah, I would agree that we need to send this back to committee. I think we need to do a deeper dive on this. We need to have information of what happens if coworkers end up using weapons. Are we opening ourselves up to lawsuits? I think we need to look at what are the best practices in other city governments across the state. And I think we need more data. So I do think this can't be something that we just flippantly change. We actually need to do a good job with this.
Thank you. Steve, you have a comment?
Well, I'll just comment, and we did have a good conversation earlier today, and Nick and Sarah and I think Sarah and I agree definitely that this needs to be looked at some more. The policy goes back to 2011. The last update was 11 years ago, so it should be revisited anyway. I guess I just want the body to know that if in fact you do vote down this motion and vote to approve the change in policy, that we are still going to take a look at the policy anyway in the next whatever upcoming few weeks because I think it's warranted. But I do appreciate the concern that's being raised. I get it.
Thank you. Okay, so Mr. Witzel?
Thank you. While in committee, I did question the removal of that. And as it was brought to my attention, it was felt by the committee that the zero tolerance violence portion of the policy covered the concerns. It's pretty clear that there's going to be no tolerance of any of the threats or any of the violence that goes along with it. So the need to further define that, I guess, was felt as though it was unnecessary. If it's the desire, I don't know how much more we can put in when it's pretty clear that there's no tolerance of any kind of threatening, bullying, implied threatening, whatever other behavior. So, I guess if HR wants to attack it again, I'll be interested to see how much they change it.
I think, again, just to speak really quickly on behalf of why I put it on the agenda for finance, budget, and personnel at the last meeting without more depth. Partly, I was thinking, the same thing maybe that Councilmember Witzel said, but more importantly, I think once we decided to take down the signs, we were announcing to the world that people coming into this building would be able to conceal carry and those kind of things. And yet the policy we have in place today says that employees and actually council members at meetings such as this cannot. So the idea of letting much time go by with that discrepancy seemed to be concerning. That's the thought about getting it done sooner rather than later and taking that piece out of it.
Mr. Paschal?
Yeah, I appreciate what Tom said, but I'm not concerned so much about the threats of violence or an employee threatening another employee as much as I'm concerned about careless behavior and, as I said, careless or reckless behavior on behalf of the employees. The police department has several policies regarding the handling of weapons, and some of those are specifically addressing the careless or reckless use of a weapon within the city building.
I'll take a vote.
We need a motion in a
I
second.
need a motion and a second to approve, with the exception of the item H2.
No, we're actually approving the item H2 to go back.
The motion is the one that was made to
Sorry.
send it back to committee on the policy.
Okay,
Right. But I don't think anybody made a motion or a second to that.
But I don't think made a motion.
I think that was my motion. I might have said
Okay,
a motion to send it back to committee for further study.
okay. Thank you.
second, Alderman Wagner.
Councilmember.
Any other discussion? Mr. Witzel?
I think if we're going to really tear this thing apart, we really need to look at all weapons, whether it be tasers, nunchucks, swords, blades, pocket knives, box cutters. If we're going to tear it apart, let's tear it apart and let's make sure it's crystal clear.
Anyone else? And I would agree with Mr. Witzel. Now, can we vote on that?
Fire,
Yes.
Paschal,
Yes,
Tompkins,
Yes.
Marshall, Wagner.
Yes.
Witzel,
Yes.
O'Reilly,
No.
Handler.
No.
Okay. Passes.
It passes. Okay, so we've gone.
Just wanted to,
Okay. We're moving item M to K for the council's look at the agenda. Resolution number 2022-33 awarding the sale of
keep going.
$4,295,000 general obligation cooperative purpose bonds series 2022A presented by Jennifer Solinsky, Finance Director.
And this will be introducing Doug Ferris, who will do a presentation.
Good evening. Today we offered our bonds for sale, and our financial advisor, Dave Ferris from Ellers, is going to walk us through all of the actions of today, and then at the end we will present a resolution for approval. And Dave is joining us on Zoom.
I'm going to share my screen. Hopefully you have the sale day report that I provided today. I'll show up. First, I'm going to fail at this. Let's see. There we go. I can't seem to get out of the share screen thing here. Oh, maybe I just drag this over here. Or how about that? We'll make it work one way or another. So the report in front of you on the screen is what we call the sale day report. It basically is a summary of what happened today, and we have some really good news for you. We sold the bonds at 10:30. Well, actually opened the bids at 10:30 this morning, and we had 4 bidders that bid on the city's bonds. As you know, the purpose of the bonds are to basically cover your 2022 CIP. There's a little bit of fire department, street construction, some stuff with a TIF number, I believe it was 12, and there was something with a subdivision, the Daniel subdivision, as well as a couple of things. Steve, I'm really happy that you were able to introduce that A1 negative look being taken out. I was going to mention that, but in this report, towards the back, you'll see the credit report that Moody's provided. So I won't go through that. That's good bedtime reading if you want to really comb through that, but it has some good information about what they're seeing. And I think it shows that we've been doing some good work over the last couple of years, starting with Ron really rebuilding a lot of things, and then us kind of heading the city down a road where we're heading the rating back to hopefully that AA3 in the future. Like I said, we had 4 bids. Your winning bidder was Bankers Bank out of Madison. The low bid provided by them was at 3.3148%. The high bid was at about 3.5%, which because of that competitive bidding, we actually were able to save about $77,000 because of that bid. Just a couple of pages down is the list of the bidders. So if you want to take a look at who bid on it, you can see that Bankers is top one, and then it's in the order of lowest true interest cost to highest true interest cost. So thanks to Bankers Bank for coming in, we actually have an interest rate that is much better than what we showed you in the pre-sale report. At the time we came out and did the pre-sale, or actually the time I was on Zoom and did the pre-sale report with you, interest rates were going up about 10 points per week. And so when we built your preliminary run, we anticipated that they were going to keep running like that. I'm happy to say that we actually did not add 60 points at all to the interest rates that we built, and we actually went down. So you ended up with a very nice turnaround in the market, and you took advantage of, basically something that hasn't been so great lately. So that's awesome. Because of the fact that we were able to save not only a little bit of issuance costs, we were able to downsize the issue by $60,000. So whereas we came to you last month with a $4,295,000 issue, because of the reduced cost by the underwriter and our premium that we received, we're actually able to shave off about $60,000. Your paying agent is Bond Trust. You've taken them on as a permanent trust paying agent so that you have some security with your payments being made on time. The bonds, once again, so like we talked about at the pre-sale report, are callable on March 1st of 32 for anything that's after that. And like I said, the issue was downsized from $4,295,000. The money will come in on August 30th. So Jennifer will be watching her bank account on the 30th and letting Quarles know that she has the money, and then you'll be off to the races and able to pay for your project. Tonight, the resolution that you have in front of you is an updated one that was in the packet, and it does have that new number of $4,235,000. So when you make your motion, you're going to want to make it for that lower amount that is on the resolution that should have been provided. Just quickly to go through the spreadsheet. Went to the bid tab earlier. The sizing sheet really shows we have the same amount of project costs. We added a little bit of premium because the underwriter reduced the amount of their premium or their discount. We saved some money there, and then this discount really this premium really goes to pay the rest of that discount. So that's where the $60,000 really came in addition to the rating being reduced, because we took the TID 3 borrowing out of here, and it actually put you under the threshold that would have made it a $19,000 cost to Moody's. So that helped a little bit too. As far as this is a little bit small. Just to blow that up a little bit and get that out of here. So this Boxton area is something that when we talked about the CIP in May, we were looking at an interest rate that was somewhere around 2.58 per thousand of equalized value. And when we put in the new values that came out from the DOR the other day, we were at about $2.32 for the 5 years, which I'm only showing you 1 year rate now. Because of the rates coming in better than what we had planned them at, they're actually down to $2.29. And when we present the 5-year plan, we'll be right around that 229, 230. The one piece that's missing out of this year so far still is the items that couldn't be used for, couldn't be funded with bonds. So we'd be probably right up to about that 230 once Jennifer is able to fund those other items if she's still going to take that to a bank or the state trust fund loan. As far as the savings, like I said, we were able to take $60,000 off because of the issuance costs coming down. So we're at 4.2. Because of the interest rates actually stabilizing and coming down a little bit, we were able to save $421,000 in interest. We got a little bit of a premium that we were going to use towards next year's debt service payment for interest. And so our overall savings over the planning run was about $486,000, which, you know, is great considering how bad the market had been leading up to us talking to you. The next couple pages just shows the breakout of the repayments by your sources. You've got, you know, like the fire in the street. This just shows how it's being paid through those. Your debt capacity, we talked about that quite often. This is actually your 5-year look with the latest plan that I have. So, you know, we're at the highest amount right now, which is about 51%. And really, we, you know, with the plan we have in place, with just 2% growth, which isn't very, it's conservative. You still go down over the 5-year period down to about 21%. So that's a really good sign. Like I said, there's the credit opinion is in here, talks about some of the things that have happened that they took the negative outlook on. There's actually a scorecard in here that you can take a peek at on this page there. Page 13 of this document that shows how we're rated for each of the marks, and we'll kind of talk about those more when we do the financial management plan presentation. And then just last, we have really the interest rate graph that shows you that, you know, when I talked to you before, we were on this upward slope, and we've been coming down pretty much the last 5 or 6 weeks, and you've been able to take advantage of rates that really weren't around since like June of, you know, maybe 2 months ago at this point. So that's a good sign. So that's all I have, other than the fact that, you know, once again, you want to approve the resolution for the new amount that Coral's provided today, and I'm happy to answer any questions.
Any questions for Dave? Seeing none. Thank you, Dave, for the report. Jennifer?
Thank you, Dave. With that, staff recommends approval of Resolution 2022-33, awarding the sale of $4,235,000 general obligation corporate purpose bonds, Series 2022A.
Mr. Paschal makes a motion. Second by Mr. Fryer. Any discussion? Mr. Wagner?
Just a point of clarification.
Yes.
Is this going to require a 2/3 vote?
I don't think that's historically been required for borrowing resolutions.
For borrowing? I thought debt was.
Budget amendments do.
No.
Check the.
No, it's not majority.
Okay, thank you.
Seeing no other comments, please vote.
Fire,
Yes.
Paschal,
Yes.
Tompkins,
Yes.
Marshall,
Yes.
Wagner, Witzel,
Yes.
O'Reilly,
Yes.
Hendler.
Yes.
Thank you. Motion passes. Item K, presentation 2021.
Saying thanks.
Pardon me?
I'm sorry for saying thanks to Dave. He said thanks to us.
Okay.
I apologize.
No problem. 2021 City Financial Audit Report, introduced by Jennifer Solinsky, Finance Director, presented by John Troutman. Thank you.
Good evening. The city recently wrapped up its 2021 financial audit, and John Troutman from CLA is here to walk us through the results of that audit. Okay. Okay, go ahead, Matt. Thank you.
Well, thank you. Good evening. Again, my name is John Troutman with CLA, Principal CLA. Tonight, I'm going to be going through kind of at a high-level summary, kind of more of a conversation about how the 2021 audit went. I'm going to be going through the annual financial report, just picking a few pages here and there that I kind of want to summarize at a high level. But of course, at the end, we'll take any questions and anything else you want me to go through. There's a lot of footnotes and a lot of information in there, so I'd be happy to talk about any of that. And then at the very end, I want to spend at least 5 minutes or so just talking about a new standard that's coming up next year. We talked about it a little bit in the last couple of years. COVID kind of delayed that process. It is now going to be effective for the 22 audit. So I just want to spend a little bit of time making you aware of that and what we're running into with our June 30th, 2022 audits. There's some complications related to that standard. So I just want to make sure you guys are aware of that. With that, I will... how's the best way to scroll through this? Page like this here. Yeah, just gonna scroll through. Should I just go just down like this? I can make it do, that's fine. Sorry about that. The first page I want to talk about is really the independent auditor's report. And that is the result of the audit, which is our audit opinion. This letter has changed a little bit this year. The formatting, the standards have changed a little bit, made it a little more intuitive. In the past, if you remember correctly from years ago, last year included, the opinion part, the actual important paragraph of that was actually on the second page in the middle of the page. They put that front and center, so that actually makes sense. Your opinion for December 31, 2021 is a clean opinion, an unmodified opinion. In our opinion, the financial statements referred to above, which is the rest of the document, present fairly in all material respects the respective financial position of the governmental activities, the business type activities, the discretely presented component unit, each major fund, and the aggregate remaining fund information. All of that is really your basic financial statements. So I'll be going through some of those. But again, that's a good thing. That means that we made no modifications. We did have an emphasis of matter on the bottom of page 1. I always want to point out those. And that is described in note 4H of your footnotes, that the city recorded a prior period adjustment of $345,000 in the government-wide and governmental fund statements to eliminate a governmental fund liability for future sick leave benefits. And our opinion was not modified in respect to that matter. So again, we're just pointing out there's a prior period adjustment. I can show how that shows up and where that shows up in the financial statements. So the next section, after the rest of the opinion letter here, is the Mdna, the management discussion and analysis. I always want to point this section out. I don't usually cover it in a presentation, but I always want to point it out and describe it. And that is exactly that. It's management's of the city discussion analysis. So the city puts this together. We certainly assist in that process of preparing this, but really these are all the highlights. It really takes the financial statements, and sometimes they can be fairly complex in how they're structured, and really puts plain English language to some of the changes. So again, highly recommend you read that and share with your constituents and stakeholders with the city, because it turns some of that complicated information into really real world plain English changes and information. Included in that management discussion analysis is a summary of some of the information that we'll go through in the basic financial statements. Kind of presents multiple years, so it's a really good analysis when you're discussing and looking at your financial statements. Beyond that starts the basic financial statements. And the first few statements are your government-wide statements, so the statement of net position and the statement of activities. Really goes through all aspects of the city. I skipped those for the purposes of the presentation. I can certainly come back to them. I don't mean to make light of them, but because it brings in all of your information, it isn't exactly in the format you budget. So what I want to do is skip right to the fund financial statements. That's what you talk about for the rest of the year is how you budget and how the operations, both balance sheet and income statement, show up. So again, that information is contained in these statements in the front, but a lot more is also contained. It converts it into full accrual without getting too technical and complicated. So on page 17 is the balance sheet of the governmental funds. So again, you'll see the major funds. Major funds are on the front page. That far right column, other governmental funds, is the aggregate column. That's a subtotal. In the back of this book is all of the funds that make up that one column. So again, we'll go through the four major funds on the front page here and talk about both the balance sheet and the income statement, or the statement of revenues and expenditures. General fund assets total $18,690,000. Obviously, you can see all of the assets. They are in order of liquidity. So cash and investments would be on top, inventories on the bottom. Follow down, you have liabilities of $1,254,000. You have deferred inflows of resources of $11,187,000. And if you take the asset number of $18,690,000 minus those two numbers, you get fund balance. That's what you're left with as of a point in time, December 31, 2021. So $6,257,000 is what you basically carried over into the year we're in right now. There's three components of that number. Non-spendable, $1,090,000. That is an amount that you do not have access to. So part of that number is inventories. Part of that number is your advances to your TIFs. So as the TIFs go through their lifetime, you advance them money. Well, again, this is a point in time. Any money that you've advanced that isn't back yet, you expect to get back, but it isn't back yet as of December 31, has to be shown as non-spendable. So that's what that category is. Below that line is really everything you have available to you. So you have a restricted category, which you don't have any in the general fund, and then you have committed. Now, committed is money that the city can commit or uncommit by formal action for various things. So that's $594,000. So again, another way to think of this is taking away from the $6,257,000. If you take that away, you're left with the lowest category, which is the least restrictive unassigned $4,572,000. So again, when you look at your health of your fund balance, when the bond rating company looks at your rating, that's what they're looking at. That's one of the factors they're looking at. So you can see that number is $4,572,000. Going back up to the top here, you can see the other major funds, debt service. Again, the fund balance, I'll just skip right down to the fund balance, $8,381, which is restricted for fund balance, or restricted for debt service purposes. You have infrastructure construction fund, which has a very small $1,314 deficit, but you can see all the assets and liabilities. And then you have parks and rec capital projects. And you can see those assets and liabilities in there. You have a deficit there of $268,000. Now, those are really timing related because, again, these are a specific time. Your aggregate column has an additional $1,950,000 in all the rest of your funds in the city. $224,000 of that is non-spendable. $2,507,000 is restricted for various purposes. And again, these are subtotals on the front page. So if you ever wanted to know what is that restriction for, you go back into the footnotes, and there's a footnote dedicated directly to that. It shows all the various purposes. $661,000 is committed in those other funds, and then you have a deficit $1,443,291. Again, the deficit is partly because of the restrictions, taking money off of that, but also timing with the TIF districts and things like that. So all said and done, your total 2021 fund balance citywide is $7,947,230. Any questions on the balance sheet? Okay. Next page, actually 2 pages. The next page is a reconciliation of that document back to the front schedule. Shows all the adjustments for the total government-wide statements that I referred to at the beginning. Page 19 goes through the same funds, but what happened during the year? How did you get to that fund balance? So it goes through really what we call a statement of revenues and expenses, or an income statement, otherwise known as. And you can see, I won't go through each one of these numbers. You can see the major functions of the major categories of revenue: taxes, special assessments, intergovernmental. Intergovernmental is all of your grants that you get throughout the year, licenses and permits, fines and forfeitures, public charges for service, and intergovernmental charges for service, and then miscellaneous. So total revenues in the general fund, $19,846,000. compared to expenditures. Again, these are all of the major categories, the functions that you operate as far as your budget. General government, public safety, public works, health and human services, culture and rec, and conservation and development. Then you have principal and interest for your debt service, and then capital outlay would be the last function. So $22,401,000 in expenditures in the general fund. So $2,554,000 of expenditures over revenues. Again, that was partly funded by a transfer in and $30,000 in long-term debt issued. So all said and done, $561,272 net change in fund balance. Here you see that prior period adjustment, which essentially adds to fund balance in the general fund. So you can see that beginning fund balance of $6,473,000, adding back in as a removal of a liability. $6,818,000 is the adjusted beginning fund balance, which gets us to then the ending fund balance we talked about, $6,257,000. Rest of the funds, you can see the revenues and expenditures there. Again, I won't go through each one of those just for time's sake, but the aggregate column, again, brings in all the revenues and expenses for all the non-major funds in the back. So you can see total revenues citywide, $30,564,000 compared to $38,738,039 in expenditures. All said and done, net change in fund balances after other financing uses and sources, a negative or reduction of $2,690,000, not including that prior period adjustment. Any questions on any of that? That's kind of an overview of your major funds, balance sheet, income statement. Again, a lot of data, just trying to hit the high points here and point out some of the major areas. Certainly a lot of numbers though. Okay, I'll continue on then. I always want to point out page 21. Exact same data set I just went through for the general fund, but it also brings in the budget to actual. So again, very valuable statement. Certainly you have all this information in your budget documents and things you go through internally, but from an external financial statement, I always like to point this out because it really gives a snapshot on one page, how you did in the budget versus various functions. So again, no new information, but nice to take a look at that each year. We turn to page 22. That shifts gears a little bit into your proprietary funds. Now, proprietary funds are a little bit different than what we just went through, which were governmental funds. They follow different accounting rules. They mirror much more like a business. They are called business type activities. So they do have different accounting rules, full accrual accounting rules, assets, liabilities like capital assets, long-term debt are included on these financial statements. So you'll see the balance sheet there. I'm going to skip right down to page 23. And you can see the net position there. Net position is a similar concept of fund balance, but net position is official terminology in a business type activity. So you can see the leftmost column, which is your Marshfield utilities column, is $98,880,658. And that's composed of a few categories there. You can see on each one of these, the top one is net investment in capital assets. Well, as you would expect, all of your utilities and all of your business type activities are very heavy in your capital assets. So what this is saying is of the 98 million, 55 million is tied up in your assets. Again, in the capital assets. Then you have a restricted pension asset of $1,313,000, capital improvement restriction of $234,000, and another restriction of $158,000, leaving an unrestricted net position of $41,319,000. If you go to the wastewater utility, you have $53,860,000, $38 million is tied up in your capital assets. $283,000 in pension asset, $2,807,000 in capital improvements left, all said and done, unrestricted, $11,928,000. The non-major, you have one non-major enterprise fund, and that's the EMS. And you can see that you have $1,880,000 in net position, $923,000 in net investment in capital assets, and then $676,000 in pension asset. Unrestricted, $279,641. And again, with that pension asset there, if you remember correctly, what that is really related to your participation as a city into the Wisconsin retirement system. That's the pension of the city. And all the Wisconsin retirement system participants in the state gets the allocation for their municipality from the state of Wisconsin's audit. And that's what that is. Sometimes it's an asset, sometimes it goes to a liability. What that means, it's either overfunded when it's an asset or underfunded if it's a liability. Another way to think of that is at this particular date, if all of the participants' money was added up and compared to the investments at the state Wisconsin retirement system, that's the difference between overfunding and underfunding. The good news there, and I think those of you that have heard me in the past, the good news there, and in Wisconsin, it's very near funded or overfunded. If it ever goes underfunded and there is a liability shown, it's usually very close to zero. And that means it's being managed properly. That means it's being funded. Other states in the country are not in that position. That's why this GASB a few years ago created this accounting. Prior to that, you never saw these numbers on your financial statements, only in a footnote, because some states are out there that are only 50, 40% funded. So again, real liabilities are out there. State of Wisconsin's not in that position. So that's excellent news for any participants in that pension. Turning the page to page 24. This is kind of where I want to conclude the financial statement analysis, and that's where really the income statement for those enterprise funds, those business type funds. Marshfield Utilities had operating revenues of $39,496,000 compared to operating expenses $34,249,000, so an operating income of $5,246,000. Wastewater utility $7,457,000 in operating revenues, $4,154,000 in operating expenses, had an operating income of $3,302,000. EMS $1,871,000 in revenue, $1,624,000 in operating expenses, had a $247,000. So total, all of them combined, $8,796,000 in operating income. Below that line would be all of your non-operating revenues and expenses. Those are things like interest income, debt, interest, fiscal charges, amortization related to debt, and then other non-operating, which is usually a small number. So you have $355,000 additional revenue, net revenue for the Marshfield Utilities, $12,505 as an expense, net expense for the wastewater utility, $27,000 in EMS for an expense. So again, those are below the line, non-operating. Below that, you have capital contributions and transfers out. And then the overall bottom line change in net position, which got us from the net position last year to what I just covered on the previous page. So $3,913,000 for the utilities, $3,320,000 for the wastewater, $220,000 for EMS. Any questions on that?
Yeah.
Yep.
Excuse me, could I ask one?
Absolutely.
I guess I see it in the utilities statement, but you know, if a municipality has funds that that has excess funds and they aren't using them, you can usually put them in investments of some sort. Mm-hmm. And you're showing in part of the assets for the utilities some investment. Are those considered, because those investments are usually prohibited from being cashed in one way or another, like a, what would you say, like a money account or something like that? So there would be a penalty for pulling it out. Are those funds considered under GASB as restricted or committed?
If you were to, I guess, clarify what you mean by you can't pull it out, like for example, an investment that you would be held for 2 years or something.
Unrestricted funds.
It is, yes. Yes. The cash investment on the top $24 million is simply normal investments, normal cash and bank. Now, there could be restrictions based on time in there if you have CDs and things like that.
That's what.
Yep, but that's not a restriction. There's no outside restriction. You could pull that money out at any time. It's just you have a penalty.
Even if you pay a penalty.
Absolutely. Yep. A restriction is an outside the city saying you may not do this under any circumstances. So.
Okay, thank you very much.
You bet. Good question. Okay. Again, any other financial pages you want me to look at, any other footnotes, I certainly can. Try to hit the high points of kind of where you ended the year. If not, I'm going to jump right into to what's coming up, but certainly open up for any questions whatsoever about the audit before I do that.
I hate to can I ask one more other question?
Absolutely.
In your audit, in your manager's report, management report, there was a carryover from the previous audit, the same one, about our ability to identify liabilities, hidden, like for instance, bad debt, things like that. Were you aware of any efforts by finance to deal with that kind of thing, especially as it might have pertained to the emergency management funds?
I guess I'm trying to understand exactly, are you talking about like an allowance?
That's the question. Was there an allowance for bad debt, or was there an effort to deal with that, saying uncollectible charges out of the accounts receivable?
Yeah, anytime you have an EMS, you have obviously, uncollectible issues. The city has not set up an allowance. We have been kind of communicating that to the city for the past few years to do that.
That's what
while it's not required, certainly recommended. Because of the way the receivables are valued and the way they're on the financial statements, it's not necessarily required. But allowance, again, as you're looking at those, you get 2, 3, 4 years, the collectability of those gets to be rather low. Now, the way that some municipalities do is they just then don't show those receivables. I don't recommend that. I certainly think an allowance method would be the best case scenario.
So essentially, your firm has identified it for the past 2 years as an issue.
Yes.
Thank you.
Any other questions? Okay. The last thing I want to cover is really related to GASB 87. And again, this is related to leases. You've always had lease standards right now that they're in place today, and they have been for many years. When you lease equipment, for example, that is a liability to you, and it goes on your books following the current guidance. The guidance has changed. This has been coming now for about 5 years. And kind of like I said, it's been delayed from COVID, finally effective for the year we're in right now, 22. So the initially, and again, if you listen to me in years past, was explaining the differences, but really didn't think it would be a big deal. We're running into in practice where it is becoming a little bit bigger deal than we thought. So my recommendation, first off, before I get into a little bit more of the detail, is start early, start now on that process. Start gathering anything that could potentially be a lease. And why I say could potentially be a lease is the guidance now has changed where it isn't just when you lease a piece of equipment for whatever reason, and it's a financing purchase kind of a thing, it is now not tied directly to an asset you own. It's tied to a use of an asset, which sounds pretty minor when you read the standard, but in practice, we're running into many different things that you do in the normal course of business that you wouldn't even dream that it's a lease today that is going to be a lease, and it's going to be included in that. So we're talking about things like embedded leases, which, again, there's many different examples. Probably won't apply too much, but I'm going to give kind of a bizarre example. It doesn't apply to you probably, but it'll help you understand it, and that is a coffee service, okay? So a large government, large company might have a coffee service, and they might have 400 coffee pots or something that a company brings in. You just pay a service charge. You pay a monthly service charge to that. Maybe it's a 2 or 3 year agreement you have with the company. That's not your coffee pot. It breaks, they come give you another one. That is a lease under GASB 87. So a bus contract for a school district, not their buses. They pay a service to come in. Could be a lease if it's a multi-year agreement. So what we're recommending to do is any multi-year agreement you have where you have a contract where you have to pay money for an asset, not just a service now, for an asset or a right to use of an asset, start gathering those things and start taking a look at those. And we can certainly assist you in that process as we go into the next year. But make sure that you are starting to gather that information because it is going to be a lot of work. And what you got to do then is go through each one of those agreements. The other side of the GASB 87 is not where you spend money, where you receive money. Currently, there is no guidance on any kind of agreement where you get money as a rent or when you're renting out land or a building or some other piece of equipment you're renting out outside the city. You just record that when it comes in. You get a check, you record it. Under the current guidance, that's the way it is. Under the future guidance for 22, that is now considered a lease. It's a lease receivable. And there's a present value calculation. There's a whole footnote that's going to have to add. And what that's trying to do is capture the revenue that's owed to the city as a lease receivable. And again, in the effort to try to make those financial statements as accurate as possible and as clear as possible, whereas now you don't have that on there. So that's problematic because you have things like cell phone tower agreements, or you put cell phone towers on water towers and things like that. And you may or may not have that. Has to be a multi-year agreement. If you have a month-to-month, not included under this guidance. It is just simply rent then. If it is multi-year, then it goes on to the next step, and there's about 5 other different categories you got to look through to see who can cancel and things like that. It gets very complex. We were doing this right now as we speak for school district clients, and some of the school districts thought they had 0, and when they got done looking at this, they had 15. So make sure you're starting this early and getting on top of that, because it is going to be time-consuming. Not something you want to wait for next year. So. Any questions on that? But again, the spirit of the GASB is to try to capture that data on these financial statements, whereas to drive more clarity, transparency. So unfortunately, with that comes complication and time to prepare for that. So any other questions whatsoever? Otherwise, that ends my presentation.
Thank you, John Troutman.
Thank you.
It's appropriate.
And recommended action to accept and place on file. Alderman Wagner, Alderman Marshall. Any discussion? Please vote.
Fire,
Yes.
Paschal,
Yes.
Tompkins,
Yes.
Marshall,
Yes.
Wagner,
Yes.
Witzel,
Yes.
O'Reilly,
Yes.
Hendler.
Yes.
Thank you. Do we want to put the screen back up to, thank you, Matt. Thank you, Mr. Troutman. Item L, second reading of ordinance number 1476, rezoning property location on 1401 South Apple Avenue from SR-4 single-family resident to TR6 two-family resident, presented by Stephen Wiley, City Planner.
Thank you. So you'll recall 2 weeks ago, this one came before us, and it was reviewed by the Plan Commission at the July Plan Commission meeting. So it's just the zone change for a residential property on South Apple Avenue, going from single family to two family. Again, the owner would like to potentially sell the property, and they thought that going to the two family zoning would allow a little more flexibility. The future land use map recommends medium density residential. So again, that 3 to 10 unit per acre. So there's kind of a range there in terms of, low to medium density there. And two family would fall within that. Also, it is consistent with some of the two family zone parcels that are immediately to the southwest in the neighborhood, along with interspersed in the general vicinity there. So with that, we do recommend approval at this point.
Recommended action to approve ordinance number 1476. Can I get a motion from Mr. O'Reilly? Second by Mr. Handler. Any discussion? Seeing none, please vote. Oh, I'm sorry.
I'll let Mr. Wagner go first.
Chicken. You mentioned in one of your earlier presentations on this particular lot that there were a goodly number of, that's not quoting you, but there was a good number of duplexes within the range of this particular lot.
Correct.
How, can you go over that again?
Yep, so there were, to the southwest on Apple, I believe there's a strip of maybe 4 duplexes, at least right there. And then there are a number of other duplexes that are within the greater context. So it's not like it's unprecedented. And I believe the zoning, when the ordinance was updated, the zoning accounted for those duplexes. That's why they're TR6 zoned.
Okay, this is going to go to TR6.
Yep, correct. Yep.
Okay, thank you.
Alderman Witzel?
Thank you. I was just pulling up the map, the GIS city map, and I'm looking at I believe it's the right property here that we're looking to rezone. And I do see that there are a handful of alternately zoned properties. I guess, we look at these things one at a time, and we look at rezoning things one at a time. And I've heard things about spot zoning, and, I've heard little phrases that are thrown around, and you refer often about future land use mappings. And I guess what I'm wondering is, why is it that we pick these apart one at a time, presenting a neighborhood that's a variety of zones instead of looking at rezoning whole areas?
So I think the precedent has been that, at least here, my understanding, when Josh and Emmett and then myself coming in here, is that we typically have done these residential ones as they come up, as somebody initiates, as a property owner does. Otherwise, we'll look at larger districts when significant zoning map updates or ordinance updates are put into place, or if the comprehensive plan is updated. But otherwise, these tend to come to us at the request of the property owner. We usually don't initiate these. So that's why you're seeing one at a time in some of these cases. It would be a spot zone if, say, we had someone requesting to zone this to commercial. That would be clearly out of place in the neighborhood. For example, it would not be consistent with the comprehensive plan recommendation. So that's kind of the distinction that I've been making with these. But I do understand what you're saying about spot zoning and why somebody might initially think that that might be the case here.
So you don't view spot zoning as it's still residential, you view it as it's a totally different?
I look at it as, is it consistent with the comprehensive plan, and is it consistent with some of the surrounding zoning? If it's something that we're making a special exception for a specific property owner that we would not make for other property owners, then that's when we're starting to get into some issues there.
Thank you.
Mm-hmm.
Any other discussion? Seeing none, please vote.
Fire,
Yes.
Facial,
Yes.
Tompkins,
Yes.
Marshall,
No.
Wagner, Witzel,
No.
O'Reilly,
Yes.
Endler.
Yes.
Motion carries. Thank you. Item N, request to authorize staff to execute an agreement for the compensation market update presented by Steve Barg, City Administrator.
Can I just check, an ordinance requires a majority of the entire council, which is 6 votes. Should we get 6 votes? Just want to make sure.
Yeah, we have 7.
7
We have
yeses?
6s.
I thought there were 2 noes.
There were 2 noes,
We had 6, yes.
so we have 6.
Okay, I just want to make sure. Thank you. About 2 months ago, back in June, I brought this item to you. I'm bringing it back based upon your willingness to reconsider it. This came out of discussions from the pay compression team, a group that's been looking for getting close to a year now at pay compression, especially in the police and fire departments. The idea that people may not want to aspire to management positions if, in fact, the difference between management and non-management positions are relatively small. So came up with some possible alternatives. You see them in the memo. I'm not going to walk through the memo the same way I did again back in June. But one of the options was to look at a comprehensive compensation market update. And you may recall again back in 17 and early 18, if you were here in the council back then, we had a company called McGrath out of Northern Illinois do a full comprehensive compensation plan with the city, which was adopted in early 18. At the time that they did that, and we set pay grades for all positions, they made it pretty clear during that presentation it would behoove us to look at updating that in 5 years with a market study. Not another full-blown study like they did in 17 and early 18, but looking at with what's happening in the market, looking at positions and seeing whether or not we're still in sync with where we ought to be, or whether we've fallen out of compliance in some of the positions based upon changes in the environment in the workforce. So this is only one piece of pay compression. There's other things you see listed there, but the team feels that this is a good first step. And it's not just for those two departments, but it's for all employees. I think it would be appropriate. If we weren't talking about it now because of pay compression, we'd be talking about it in early 2023 anyway, hitting that 5-year mark. So you have a proposal in front of you, once again, from McGrath, and it calls for a base of about $16,000 for what they would normally propose, and another roughly $9,000, a little bit over that, for a piece that in part will address the pay compression issue. It's a little bit deeper dive into some of the disparities or potential disparities among employees in terms of compensation. There's been no money budgeted for this, so what I'd be recommending is the council approval of or authorization to enter into an agreement with McGrath for the amount of $26,080, and that would be for the comprehensive market update plus the optional enhancements that are referred to. So the funding source, although not in front of you right now, would ultimately be contingency. We bring that forward in a future meeting as a budget resolution. So with that, I would take any questions, but otherwise, staff recommends council approval to authorize executing a contract with McGrath in the amount of $26,080 for the compensation market update and the optional enhancements with McGrath.
Mr. O'Reilly?
Thank you. I have a question. What geographical area, or do we know where the coverage is for these studies they do? I just concerned making sure that it's usable information, which I'm assuming it is, but I think it's worth the question.
Yeah, thank you. And I should have mentioned before that one of the reasons that the council said I could bring this back at a later date was the hiring of Sarah Dressel. I don't know if we knew it was Sarah at the time, but having an HR director on board was something that you felt was important before we would enter into a process like this with a consulting firm. But going back to your question, they'll be looking primarily at comparable municipalities across the state of Wisconsin. That will be their key focus in looking at the market rate for certain positions.
Alderman Wagner?
Yeah, thank you. I guess you may have said it while you were making your initial presentation. I was busy fighting with my computer here. But this compensation plan covers all positions? The update covers all positions, or does it cover just the positions that we were having compression issues with?
No, it's all employees. And I don't know how they do this in terms of how they flag the information, benchmark certain positions and play off that. But it's full citywide. It's not just based upon police and fire department. This is what they intended to do when they made the recommendation back in late 17 and early 18 that we do a 5-year update in terms of finding out whether or not we're still in sync with the market.
Alderman Wagner?
Yeah, thank you. I'm sorry Mr. Fisher isn't here. Don't tell him I said that. He was very concerned about this compression issue between certain union positions and management positions. And we just recently struggled with that down at county. And I don't want to say they solved it, but we dealt with the problem simply by taking those positions and taking the management positions that were like, as a matter of fact, we just passed this last Tuesday. The management positions would get 4 and I think 0.3 something % increase. And the positions, the highest paid positions that were infringing on the management positions would get a straight 3%. And that was an easy way of handling it. The theory was that we wanted to make sure that between the two pay grades, there was at least a 5% gap, so that there would still be some incentive from moving out of the lower union position and into a management position. And the problem that's not much, 5% isn't a great deal, but at least it was something. And I'm just looking at the amount of money we're going to pay for this and saying, I think it would be cheaper for us to do something like that. But I'm just throwing that out. And we don't have a motion on the floor, so I'm not even sure what we're debating at the moment, but, oops, there he is. Okay, I'll yield the floor to my friend, my colleague.
And
Alderman Paschal?
I'll make a motion to authorize staff to execute it.
Thank you. Second? Alderman Witzel?
I'll second it just to continue on with our debate.
And any more discussion? Yes, Alderman Varsho.
Are all city departments included in the STEP program right now?
Everybody who's not represented, the represented police and firefighters are outside of that, they're contractual. Everybody else is part of this pay plan. That includes the management. Well, I'm sorry, library, apart from library. But the police and fire management are separate from that. And the library's worked with McGrath and is trying to do some work along those lines to upgrade and update their plan as well. And they'd like to piggyback with what we're doing ultimately, but they are not currently governed by our pay plan. They're governed by the library board and what they adopt.
Alderman Witzel?
Thank you. So this does not provide any information on represented employees.
Correct. They're governed contractually by their collective bargaining agreements.
Okay.
I do want to add one thing, if I can, real briefly, to what Councilmember Wagner said. It's a little bit challenging to create that separation. You're probably finding that at county because represented employees have opportunities for overtime and other things that management don't. But that aside, creating separation is essential to incentivizing people to take positions in management.
Alderman Witzel?
Thank you. Is everything that we pay strictly hourly, or are there salaried versus hourly employees within the city?
We have both exempt and non-exempt employees, meaning hourly and salaried.
Okay, and so then what do we do to make sure that we don't have an issue with compression of that? Because anytime you have hourly and you have overtime, you have the potential that those hourly overtime paid employees can eke up on those that are allegedly higher paid salaried employees who are working potentially 60 hours a week, but not getting paid the 60, they're getting paid for a straight 40. Does this study help to identify those?
I know we have employees in the city, including at least a couple who attended these pay compression team meetings, who pointed out that compression is not limited to the police and fire departments, that other departments may be seeing a little bit of that as well between department and division heads and those type of folks and other people in their departments. Having said that, many of our departments have limited overtime in comparison perhaps to fire and police, who are emergency responders who respond to calls that are unexpected and just happen, and the need is there. But there is overtime earned by some hourly employees elsewhere in the city, and that can, if you earn enough, cut into that separation between you and management people above you.
I'm somewhat reluctant to approve this because I don't feel as though they do enough. I feel as though they think that government lives in a silo and that we should only compare ourselves to other municipalities and hey, if Rapids is paying that and Wausau is paying that and Point's paying that and La Crosse is paying that, great. But I think one of the biggest challenges that we have here is those leaving government positions for the private sector. And they come back with well, we just don't know what they make in the private sector. And I don't buy that, because there's enough information out there that anybody who wants to know what the average construction worker makes can find it. And I'm very disappointed that McGrath doesn't seem to want to dig into those resources to make sure that they are comparing us to the private sector. Granted, there may be some positions within city government that don't have private sector counterparts, but accountants are accountants. And street department people are, for the most part, very similar to private sector type roles. There's got to be some level of comparison, because if we're having issue with people leaving to go to the private sector, is it because we're not paying enough? Is it because our benefits are not good enough? We need to do a full, complete, comprehensive comparison, not just well, this is what other municipalities are doing. So the resources are out there, and I'm reluctant because to this point, McGrath has not tapped into those resources.
they've said, well, they're just not telling us what they may or what they pay people. I don't buy it. And it's really a struggle for me to say that this is worth the money.
We can certainly push on McGrath to gather data from private employers. I do know this, not only with McGrath, but also for Carlson Detman before them. It's very hard to get data. Now, what you're talking about, I think, is summary data that's out there, reports that you can tap into that shows what a typical, accountant or whoever makes in the Midwest. But I know some people think, well, why don't we call other employers and find out, what they're making at people, employment here in this community or Rapids or Point or whatever. Those folks are very hesitant to share that. First of all, they don't get anything for it. Secondly, they're pretty, quiet about it. It's kind of proprietary to them what they pay. Whereas the public sector, if we call another city or village, they have to tell us what people make to be an accountant or a building inspector or whatever. But I can certainly try and push on them a little bit to see if there isn't at least some broad data they can get that would be helpful in Wisconsin and the surrounding states. I just don't think you'll see them getting specific data on specific companies to compare it to communities.
Alderman Paschal?
I think it's necessary to have a study because obviously our new Human Resources Director does not have the time to do a study on her own. We have this company that we've been working with that developed our plan, and I think that they're the likely group to be doing this study. And even though it may be anecdotal evidence, I can't recall anybody who's left our employ because they're looking for a job that pays them less with worse benefits.
Alderman Wagner?
Thank you. One of the things that was brought up when they handled this down at county was they told management that they had to be more judicious in their use of overtime, which is something our managers should be doing too. But the point was that they recognized that there was an opportunity for overtime and that was going to create an imbalance. But they tried to make the base pays as separated by a 5% margin at least all the time. The other thing, and Carlson Detman, there's another company that does exactly what McGrath does, and they're a much bigger company. And in 2011, after the Act 10 was put in place, Carlson Detman did 80% of all the revaluations in the state of Wisconsin. And what made them so controversial was for the first time in the public sector, they were using private sector prices, wages, to compare the city or the municipal or governmental agencies. And that the big one, and I think Mike might remember this, the big one was on, the county employees, nurses and LPNs and nursing assistants. And they started comparing the county's skilled nursing employees with private sector CVRFs. And it was like, ours were like initially at $16 an hour, and the CVRFs were $9 and $10 an hour. And when they put that into the pay scale, it froze, I think, 20 or 30 persons from pay raises for a long time. And so there was a lot of controversy about that. So the point is that if you got to be careful, because the job descriptions from the private sector to the public sector may not match, they may not mesh up, and you may be penalizing some people and rewarding others for the differences in what's in the job descriptions themselves. So I get a little worried about that. So just want to pass that along.
Any other discussion? Mr. Fire?
Ed's right. For a while there, CNAs, RNs, and they were going private because they were paying a ton of money. And the McGrath they forced them last year, the year before, we forced them to raise their pay rates, the rates, so we could maintain and get CNAs, and, because we were just getting them, we were losing them hand over fist. Because the private sector doesn't have to deal the way the county did. The county finally came to go over to see the dear Lord and say, we can't do this.
Correct.
McGrath did agree with us. They didn't want to, but they did.
Anyone else?
And again, I don't know how this vote is going to go, but if it's, there's support for moving forward, and if there's consensus about trying to see if McGrath could try and solicit private data, at least at some level. I'm guessing it'll be high level. Again, I've been told more than a few times by those folks and others that getting data from individual companies in this area is virtually impossible, because what incentive do they have to share what they pay with people not knowing how that's all going to be used? But if there's a sense that some of that is irrelevant, we can certainly see what they can do.
Alderman Witzel?
Regarding that, I don't think they have to get a hold of any specific company and say, how much are you paying? I think all of that information is available online through a lot of websites, recruiting websites, Indeed.com, so on and so forth, that simply say the average whatever makes this amount of money in this area of the country. It's easy. It's right there on the internet. It's not a big deep dive, and it's not asking companies to share their secrets.
Any more discussion? Please vote.
Fire,
Yes.
Facial,
Yes.
Tompkins,
No, can you hear me? I have to use my phone.
Marshall.
Can you hear me?
Yeah, we could hear you. Marshall? Wagner? Witzel?
Yes.
O'Reilly?
No.
Hendler? 5 noes.
5-3. Okay.
Yep, 5-3.
Item O, request to appoint a review team to rank proposals received for financial audit services and recommended entering into an agreement with the preferred firm, presented by Steve Barg, City Administrator.
Thank you, Mayor. Well, similar to what we did with the banking RFP back in the spring, we're now marching through, thanks to your approval, a process of seeking proposals for audit services. Of course, we saw CLA here earlier today, and they've been with us for 9 years, a 5-year first term and then two 2-year extensions. But as I've said to the Finance, Budget, and Personnel Committee before this, it seems appropriate after 9 years to see what else is out there in the marketplace. So you have the RFP in your packet. I just want to touch on the fact that we're moving along in the schedule, getting to the point here where we'll be concluding, accepting proposals, and then moving forward. And so we need a review team to take a look at the proposals received and rank them, if necessary, interview principals or whoever from the firm will be representing them with the city, and Marshfield Utilities is part of this as well. It's a joint effort, as it was with banking services, and then come up with a recommendation on what firm to go with. So my proposal for the joint between utilities and the city review team would be Jennifer Selensky, our finance director, Jordan Munger, our accounting manager, 2 elected officials from this body, and 3 representatives from Marshfield Utilities to make up a 7-member body to go through the proposals and determine how to move forward and who to recommend. So with that, I would recommend approval of the review team as outlined above, and look for council to select 2 of its own, the mayor or members of the council itself.
Is there a motion?
I motion to appoint a review team.
Motion by Tompkins. Second by Mr. Hendler. Any discussion?
We nominate people to be on the team.
You can take this as 2 separate motions, do whatever you want.
Okay.
Alderman Witzel?
Thank you. Are the 3 representatives from the utilities going to be commission members or paid staff?
I haven't asked them yet. Based upon the way they participated in the banking services RFP, I think the commission had entrusted staff members to be part of that review team. But if they decide they want to have, 1 or more of their commission members, that's up to them. I don't feel that we ought to dictate that.
Okay.
Alderman Tompkins, did you have a question?
I'm having internet problems. I'm sorry. I was wondering, can fellow council members nominate people to be on the review team?
I guess I would suggest that maybe we first have a approval of a motion to set up a review team, and then we can maybe have nominations or people volunteering to serve on that body and go from there.
So no more discussion. Can we vote, please?
Fire,
Yes.
Facial,
Yes.
Tompkins,
Yes.
Marshall,
Yes.
Wagner,
Yes.
Witzel,
Yes.
O'Reilly,
Yes.
Hendler.
Alderman Witzel.
I would like to see Ed Wagner serve on this.
Ed, do you accept? And Alderman Handler. Alderman Tompkins?
Oh, I just wanted to nominate Alderman Hendler.
He beat you, but okay.
It may be
Yes. And we'll make a motion to accept both.
So Witzel.
Alderman Witzel and Alderman O'Reilly. So Alderman Witzel will approve the first motion and second by Alderman O'Reilly. Seeing no more discussion, please vote.
Fire,
Yes.
Facial,
Yes.
Tompkins,
Yes.
Marshall,
Yes.
Wagner.
Yes.
Witzel.
Yes.
O'Reilly,
Yes.
Hendler.
Motion passes. Thank you. Item number P, proposal for special council meeting presented by Ed Wagner, Council President.
Thank you, Madam Mayor. It wasn't too long ago, just that we had a very tense meeting here in this room. It was a joint meeting with the Fire and Police Commission and the Common Council, and we were talking about some. We were informed at that time of some accounting discrepancies that led to a negative balance in the EMS fund. We know we're going to have to deal with this. Actually, most of us on the council, we have a few newcomers here on the council, but most of us on the council have been through some pretty rough times and some pretty strange issues that got presented to us. There was the situation with the TIF, there was a situation with the clerk of the court, and now this. And there was a lot of anger expressed after that meeting. I talked with several of my colleagues after that, and there was a great anger about this. And one of the things that they felt is that the council needs to address this. We don't want to toss this into the laps of the staff, but the council has to decide on the big issue. And let me summarize what I think that is. We need to recognize at the very beginning that there are two separate agencies involved with this issue. One is the Fire and Police Commission that has the statutory responsibility of actually managing the fire and police departments and all the different branches of that, which would include the ambulance service or the EMS. On the other hand, the Common Council is involved is because the one string we hold on this is the string on the purse. How much is spent on those agencies? There are court cases that show that, let's say we did $1 million. We said we were giving the fire department, the fire and police departments $1 million a year. Theoretically, the Fire and Police Commission could arrange that $1 million any way they wanted to. But we do have the control over the total amount. Overall, we need to examine the strength of our commitment to a city-operated ambulance service and determine if we wish to continue with it. We need to determine what level of support from the general fund, if any, we want to contribute to an ambulance service. That's our responsibility. That's not the Fire and Police Commission. Once we give them the money, they have to manage it. But we have to make our commitments and decide for ourselves where these things go. If we want to consider the service, if we want to continue the service, then we need to find out why it is not self-supporting, why these things happened, and how can they be presented? How can they be prevented in the future? If the fault is in our organizational approach, are responsible for the errors, we need to make changes in how we're organizing this and how we're doing it. But if there are personnel responsible for this, we need to make that correction also. And we have to make some tough decisions if those problems are within our jurisdiction. Obviously, if the problems fell outside of our jurisdiction as being members of either the police or fire departments, it falls under Chapter 62 and is the responsibility of the Fire and Police Commission to deal with it. I think leaving the staff out of this discussion is necessary because the staff in general are not uninterested parties. And I think the responsibility for solving the problem, for coming up with a policy to solve the problems, belongs here. It belongs here more than anything else. I think the reason it belongs here is because the people who have probably the biggest interest in how this turns out are the taxpayers. They're the ones, and they are depending on us to make the decisions and work with it. I want the council to be able to freely air their anger, their misgivings, their thoughts and their ideas about how to address and solve these problems, and maybe even put forth a framework for gathering information that we need to make a good decision for the citizens of Marshfield. I would hope that we would come to a consensus. I would hope that it would be unanimous that we found out what we wanted to do and how we wanted to do it. I may be a dreamer, but I would like that very much to happen. And I do want us to speak with a common voice eventually. So I'll be working with I'll be talking to the city attorney about the mechanics of holding such a meeting. Be talking to Her Honor about her wishes as this may go through. And I would hope within the next week or so, we can put something forward. But at this point, I'm very anxious to hear your thoughts about this process. Thank you.
Any discussion? Alderman Witzel?
I do agree that this is a necessity. I do think we need to hit this head on. We need to figure out where to go from here, and I would be in agreement with such a meeting.
So you make a motion?
My microphone's on. You can't hear me? Oh, sorry. I'm in agreement with you, Ed.
Oh boy, stop the ship. So is that in the form of a motion, Alderman Witzel?
Do we need a motion? Are we doing a formal action, or are we simply getting the input
You
from
tell me what.
I don't think Ed was asking for motion.
Okay.
Unless there's a larger.
There you go.
Yeah, you get your revenge one way or the other. I think unless there's real strict or real strong opposition to it, then we'll just proceed and proceed with trying to set up the meeting and some of the parameters and the mechanics.
Okay.
Thanks, Trina.
Alderman Fire?
How long do we plan on running this meeting? Are you going to have 3, 4 meetings? You aren't doing this in one meeting. You won't do it in 2.
That'll be
probably 4 or 5. It's going to cost you more than to solve the problem.
Alderman Paschal?
I agree that it's going to take more than one meeting to solve this problem, and I think that it's also going to take more than the 10 of us to solve this problem. We're going to need a considerable amount of input from the finance people, the fire people, and probably Mr. Barg and many others for their expertise, because none of us know anything about these issues.
Alderman Whistle?
Thank you. I'm strictly thinking about what Mr. Wagner brought up. There are some specific topics, some specific thoughts that need to be discussed, and I don't think that that requires staff to consider. I can't remember the laundry list of items, but it was, whether or not we privatize ambulance billing. How do we, what is the direction that we see for the future of Marshfield in terms of that part of it? There's a lot of things that I think the council needs to weigh in on. How we're going to deal with a deficit, yeah, that may take additional parties to weigh in on. But I think if I'm understanding what Mr. Wagner is suggesting, he's looking at a general direction of okay, we have an issue. How did this issue happen, and what direction does the council feel is the best for the citizens of Marshfield? And then once we make those decisions, now we start planning the nitpicky details of how to get there.
Yeah. Okay, I think I'm recognized. Thank you. Okay. Basically the way I see it is that you're right, it's going to take more than one meeting, but what I want to happen at the first meeting is for us to outline what we think needs to be done and where we want to take it. And at that point in time, I think Mr. Paschal is right. I think at that point we call in at some other meeting, we have the staff come in and we have them tell us how we implement what we decided to do, or how we can do it.
Alderman Fire.
Yes. I'm going to make a statement that I don't make very often. I don't hear a lot of things from a lot of citizens. After our last meeting that we had on Tuesday, I heard more people say, don't go back to the REMS funeral home type of an ambulance. Don't privatize it. We probably got one of the best. You want to hear a scream in this community is you take away what they've got now for EMS and services. We have to find a way to fund that, not get rid of it. Because I'll tell you what, I can remember when I called the meat wagon, they picked you up, they took you to the hospital. If you live, you live. So everybody at our age should think, do you want to get one of those rides? I'm close. I'm only a couple blocks away. They'll get me there real quick.
Yes. Nobody's talking about private.
Excuse me, Alderman Tompkins had her hand up.
Oops, I apologize.
That's quite all right.
Thank you, Madam Mayor. Just a question for Mr. Wagner. Are you proposing a closed session meeting? And if so, does that fall within the regulations of what qualifies as a closed session? Or are you proposing a council-only open session meeting?
I talked with, if I'm allowed to answer that, I talked with the city attorney on that, and that is a sticking point that we have to deal with. If we start talking about anything that has to do with personalities or anything like that, we may want to go closed session. Is that fairly stated, Mr. Attorney?
Very vague.
That's as vague as I can.
That's very vague. There are parameters that address what can be discussed in closed session or what's appropriate for a closed session. So I think that's probably what Alderman Wagner was talking about, is that he was going to speak with me about, how to structure a meeting and what would or wouldn't be included. And I think at that point, you got to make your decision over whether it's going to be an open session or closed session. But in many respects, when you look at that, the fact that even the meeting we had last time was in open session, and for the most part, and the assumption should be that it's open session, but there are some narrow parameters in which you're looking at, certain performance data or employee performances and things like that. Even in the context of this type of more global issue, you could go into closed session, but I think we better be able to refine that very closely before we go into, a closed session on that matter.
Alderman Wagner?
Yeah, in response to my friend, Mr. Fire, yeah, I know you don't like the point is, I don't think anybody's talking privatization at this point. I don't think anybody is. I think it's looming out there on the table, but I don't think, or on the horizon, but I don't think anybody now wants to do that. When I said that we need to discuss our level of commitment, that's something else. We may be talking about size or services or contract or something like that. But I do not see any actual movement on privatizing at all. So I hope that answers your question, Mike.
Not my question, it's their question. Sorry, it's not my question, it's what the citizens are. This is the first time I heard a scream on anything. And they're not disappointed, they're not angry. They're not thinking that we did something wrong.
Correct.
They want us to solve it. They don't think we did something wrong. Somebody did something wrong. And I think we as the city might have. We probably took funds out of that fund we shouldn't have taken. That's what they're telling me. I'm surprised that I get that much within a week. And I see quite a few people.
Yes.
Yeah, if I can just, I think I know the answer to this question, but I have to ask it. By the fact you're starting down this road, are you basically asking staff to hit the pause button? Because after the last meeting, my thought was to get some of the finance and fire staff together and start talking about options, baking further options to address this. Are you saying hold off on that until such time as something has come out of the meeting or meetings that you're talking about?
Alderman Tompkins?
Steve, I would say that from what the response was from the council at that joint meeting, if you were at all planning on gathering people, I would say you need 2 or 3 council members to participate as well, because there was quite, I heard very strongly that people felt like they were not in the communications loop.
Okay, I appreciate that. Thank you. So I think given that, it's probably best for us just to wait to see what comes out of your conversations, because I think that would run into why are there certain 2 or 3 people meeting with staff. And I think it's probably best just to chart your course and your direction and then let us know what that is.
Anyone else? Yes, Alderman O'Reilly.
Thank you. I would just like to stress, although you have heard from the direction you have, Mr. Fire, I have heard quite a few from the other direction. We had some interesting conversations. From the input I've heard, nobody wants to lose the Gold Star service that we have. I know it was brought up in the last council meeting, and it rightfully should have been. We should be looking at all options. But from everybody I've talked to, that's not a realistic option unless it was a last resort. So I just wanted to stress that there is other people out there that are talking about this as well in a different tone.
So, Mr. Wagner, what is your pleasure? Oh, open up. Let's hear you.
Do you think we need to take a vote on this?
I think it might be helpful, just this me speaking, so that there's a consensus of the body for what you're going to try and orchestrate between meetings and get going. That's just me personally.
I agree.
Okay, in that case, I'll make a motion that we arrange for a council-only meeting in the very near future to address the emergency medical service issue.
And Alderman Witzel seconds the motion. And please vote.
Fire,
No.
Facial,
I'm going to vote yes under the constraint that it's a very narrowly focused meeting as the city attorney directs.
Tompkins,
Yes.
Marshall,
Yes.
Wagner,
Yes.
Witzel,
Yes.
O'Reilly,
Yes.
Endler.
Yes.
Passes. Passes. Thank you. So we'll have to set up a meeting at some point very soon. Absolutely. Item Q, adjourn to closed session under Wisconsin Statute Chapter 19.85(1)E, deliberating or negotiating the purchasing of public properties, the investing of public funds, or conducting other specific public business when competitive or bargaining reasons require a closed session. Develop agreement for the project on TIFT District Number 10. Develop agreement for project on TIFT District Number 13, and termination of previous agreement related to develop this land. Motion? by Witzel, second by O'Reilly, to go into closed session.
Take a short,
Pardon me?
we take a short break.
And take a short break. Thank you, everyone.
I'm sorry, I did roll call, yeah.
Fire,
Yes.
Facial,
Yes.
Tompkins,
Yes.
Marshall,
Yes.
Wagner, Witzel,
Yes.
O'Reilly,
Yes.
Chandler.
I know.